Okay, so let's start with the monthly chart on crude oil. Let's talk about how you can make profits, especially with the drop that we have seen on crude oil. And so we are going to start marking this up, but I first want to start with a monthly level. I think this is important for us to look at, especially where price has touched before at these lower levels at $63 a barrel. Hey, the professor here, and welcome back to my channel. Now we're going to be breaking down crude oil first to put you in a good position to look for areas of profit. And then on the second half of today's video, I'm going to give you some bonus coverage, and we're going to do the exact same thing for natural gas. So if either one of those two is your priority, you can always go down below. Everything is timestamped, and you can jump to the certain parts that maybe are more important to you. But I hope you'll stick around for the entire video. Okay, so before we get into the analysis, let's kind of take a look at some of the big headlines from crude oil this week. Again, oil settles down at 2% after the big drop, which they say was also impacted by the jobs report that came out on Friday. Now, here is something interesting in the article that I wanted to point out as we kind of move through this article, and that's this line right here. Okay, Bank of America has lowered its Brent price forecast. And again, if Brent is being lowered, so would obviously crude oil WTI, from $90 down to $75 a barrel. So again, that's pretty important because you've got the big institutions now saying, you know what, we realize we're probably not going to meet our expectations. So that kind of gives us where they kind of expect the price to kind of settle as we begin to kind of wrap up at September, October, November, and December for crude oil. Now for us, this wasn't a big move. We have been selling crude oil for the entire, really last couple of weeks. Again, you can see here in the chart over my shoulder, we've been telling our members, hey, we are only bearish on crude oil because I saw the levels being broken from 70 to 69 to 68. And so we have been doing primarily nothing but selling crude oil. And so if this is something that interests you, if you want to take advantage of a 7-day trial offer, you can go down below to theprofessortrades.com, find that plan over the 4 or 5 different plans that I have to offer, and come in and jump into our community so you can get some massive value, not only from me, but from our 300 plus members that we are here to make sure that you are successful with crude oil, natural gas, some of the indices, and some of the Forex pairs as well. So we hope to see you there. Okay, so let's head back into the analysis. And what I want to do here is I want to go ahead and mark up this as monthly support so that you have it here. And again, I encourage you that as we go through this video, you are marking up your charts on your platform, looking at the price action. We understand the price on the right might be different because every platform may have a different price, but the price action, what you see on the chart, the candle formations, should be pretty similar. So a couple of keynotes here, and we just started the month of September, is that we've had a lot of volume, a lot of movement in such a short period of time with really only, 5 days of trading or so. So again, we have a lot of push to the downside that's probably not expected to stop anytime right now. Okay, we did close below this structure point right about here, okay, which we have had some previous resistance from before, or previous support, I'm sorry, here and here. We did close below that level. So for all intents and purposes, we will probably continue at least a little bit further down. Now, if we look, okay, at a Fibonacci level from the monthly chart, and we go from where price took off here to the entire retracement of this up, this down, this up, and this down, we can see here that we are now touched the 88.6 area. Now, this is traditionally when we are day trading, okay, inside of our club. This is where we are looking for our reversals. Okay, this is where we are looking for our possible bounces for the short term if we're going against the trend, and if we're going with the trend, then obviously we're looking for that bigger move. But I just wanted to point that out, that on the monthly, we are now at the 88. The question is going to be, are they going to come all the way back down to retest that low that you see on your chart? So what I'm going to do now is get rid of these Fibonacci levels. And again, that is our monthly support that we have issued there at 63.37. Realizing that price right now, based on this crude oil chart, is at 68.08. So now let's go ahead and head over to the weekly candle. And again, this is what we've been talking about. We have been selling since we began to see this price action happening inside of our members area. We have exclusively been selling. Yes, we've had some opportunities within the weekly candles to have a few buys, very short scalps, but the structure and the trend continue to show bearish movements over and over. And so we have been selling, but again, now we are looking at this candle that again has closed, okay, below this support level right here. So again, by all intents and purposes, we're going to see price continue further down. How far down? We will let price action tell us, but please understand that we are in a weekly bearish engulfing candle as well. And so we're going to continue with the bearish sentiment, right, until there is something different for us to do. So now we're going to drop over to the daytime candle. Okay. And so here you get a perspective now to kind of see this area. And this is where I will begin to kind of mark up the different levels, starting with the daily time frame. This gives you a little bit more perspective. We had multiple touches in that area, so we're going to leave that trend line there. Okay, we're going to look over to our left, and if you can see here, what I like to do is kind of align these wicks, and we can see here where price has tapped at 67.71. And let me bring in this circle here, which makes it easier for the viewers. And we go over to the left. You can see here that we had an area before where we had a nice bounce up. We look over to our left. We had an area before that had a nice bounce up. We look further to our left. We had another area that had a bounce up. We look further to the left. We had an area that bounced up. And then here we had a breakdown to where? The monthly support level. So again, I think the correction is coming pretty soon, but we still have to be patient and trade what we see within these particular areas right in here. So I wanted to show you the daily perspective. And now what I want to do is I want to go ahead and mark up a couple of levels just to the top side that kind of act as both support and resistance. So again, we kind of get a feel for price action. And even though these seem very small, right, that's about a $2 difference. So that's about 200 points difference there where we're seeing some price action. And it's important for you to understand that, and you'll see why as we kind of drop down. And then we saw a bounce here, a bounce here, a bounce here. So we're going to kind of work within these levels now as we squeeze out the chart. Now I want to come back to this level here, and I want to mark this as a, hold on, I want to mark this as a daily level. Okay. And from this point forward, I'm just going to kind of put daily or 4-hour level, because again, resistance could turn into support and support could turn into resistance. Hey, and don't forget, if at any time in this video you're getting some value, hit that like button, share this video, and subscribe if you are brand new, and hit that notifications bell. Okay, so now let's kind of take a look at our 8-hour perspective. And again, now we begin to see how structure was working. And again, this was pretty simple. And I just kind of want to show you real quick, okay? Because if you can learn something from this video, that would be my goal for you, because my goals are very simple for you to do. And I kind of want to show you that my plan is very simple for you. My plan is for you to learn the key zones for every chart that I ever will share on a video. And secondly, and probably just as important, I want you to feel better about your trading decisions, because at least you have some information to go with, okay? And if this is your first time here, who am I? Well, I've been teaching business courses for over 15 years, both graduate and undergraduate levels at a major United States university. And also I've been an investor and trader coming into my 9th year now, and I struggled for my first 3 years, and it took me the right mentor, the right community for me to turn it around and eventually become a six-figure trader. And now my goal is to be able to give back to you. So very simple. Follow what you see on the chart, mark up your chart. If you have questions about the video, drop them down below at the comments. If you've been on my channel for a while, you know I pretty much get back to everyone within 24 hours. So let's go back into the analysis here and let's kind of see what is happening. So again, these were very, very easy sells in these reasons, because what we were doing is we were taking these to the bottom. We were taking these candle structure breaks to the bottom. We were taking these candle structure breaks to the bottom. So this is why we've been selling. Not only has the overall trend been a downtrend, right? We were waiting for patterns to come back up to certain levels, okay, to certain Fibonacci levels before we sold. So for example, let me show you from this high, okay, to where this price began to turn around here, okay, we began looking at Fibonacci levels, and then we were waiting for structure breaks to happen, okay? So we had that Fibonacci level here at the 50. Up here, we had it at the 61. So we were waiting for these same structure levels to happen to take our trades. Same thing with this high to this low. We simply just added a Fibonacci from this high to this low, and it came perfectly into the area where we look for our reversals with the trend. We had a trend line, we had a break of structure, and that was the last massive sell down that we took. So again, this is something that you and everyone can learn here, and this is what we focus on inside of our trading group, not only with crude oil, but with everything that we do. So we now see that we've had this quick rejection point towards the end of the last 8-hour candle on Friday. Now, we will get to the gap in just a little bit, and I've been asked by a few of our members to explain the gap again, and I will, but let me jump now down to the 4-hour candle. Okay, so we're now looking at 4-hour. As you can see, structure is still pretty much following, okay, everything that we need to on a 4-hour level. You can see the bearish structure on this chart, and I really want to focus in on what happened on the last 2 4-hour candles, because I think this is very, very important. Okay, and this is the candle here. The red candle gave us a bullish engulfing candle. And usually when we see a large push like that, right, we typically see what we call the impulse, which is that candle. We usually see a retracement, and then we see a continuation. So if you adapt this principle, okay, and you look at what happened in all these areas up here, it's usually what's happening, right? We're getting the impulse, we're getting a retracement, and then we're getting the continuation. We're getting the impulse, we're getting the retracement, we're getting the continuation. So this is why we have to really look to see if this daily level is going to hold, because if the daily level does not hold, then obviously we're going to start dropping down into the mid 60s when it comes to crude oil. And again, this will become a little clearer as we drop down a couple of more time frames. Okay, so we're going to wait to see what happens. Of course, there may or may not be a gap with the Sunday market open. And if that interests you, we trade the gaps live every Sunday at 6 p.m. Eastern Standard Time. So if you're a member by then, we will welcome you and you will join us for the live stream Sunday at 6 p.m. So now let's drop over to our 1-hour chart. And we want to begin to see what's happening at price action. So we can see that this is a very important level as well. So we're going to mark this up as a key level, because this was a key level not only on the 8-hour, not only on the 4-hour, but we can see that it's also held on the 1-hour. So you'd want to mark up that level as well. And then you want to mark up this level as well, because again, we have seen both support and resistance up at that level. And we'll kind of just focus in on this area for now, and then we'll update you as members as we do daily, twice a day inside of the members area. So we want to kind of see what happens with this price action. Now, once we get to the 1-hour chart, I'm a visual person. I like to begin to mark this up with these type of yellow horizontal areas. Why? Because it gives me a visual and also lets me realize that, remember that a zone is never an exact price. It is an area, right? So you want to look for price to react in certain areas. And so we'll mark up one more to the top here. That was a little bit of a false breakout from that area, and we want to kind of work within this area. So now that we have our level playing field, right, we begin to zoom in and see how crude oil has pretty much been moving from level to level, and that's exactly how we trade it, level to level. Now, this area right here, and I'm going to take a second to explain this. This is where price closed on Friday. So that would be considered a gap. Let me explain what that is real quick. So price closed there on Friday. So what does the gap mean? The gap means nothing more than this. Price closed at a certain price point on Friday. On Sunday, when the crude oil market opens at 6 p.m. Eastern Standard Time, there's three only options that can happen. Price opens at the exact same price, price opens higher, or price opens lower. If B or C happens, price opens higher or price opens lower, the difference of price creates a space in the chart or a gap, okay? And then we look to trade the gap if it meets certain requirements that we talk about inside of our live analysis. It has to have at least 50 points or more. We trade it with a very smaller lot size because these gaps could stay open for a few minutes, for a few hours, for a few days, or even for a few weeks in some cases. And again, there's a whole strategy to that we cover. But I wanted to explain what the gap was because I had a lot of questions and comments on some of my YouTube videos. Hey, Armando, can you explain what the gap is? Very simple. Anytime price closes and opens at a different price point, that is considered a gap. So what does that mean? When we open up on Sunday, if there is a candle that opens up here, okay, and I'll make that candle green since it would be up, okay, the difference of where price closed, which was here, okay, at 68.08 to where it opens, okay, then the difference is called the gap, okay? Price closed here, price opens here, the space of the chart, the space of the price difference is considered a gap. Now, let's say that price gaps down. That would mean that price opens on Sunday lower than where it closed on Friday. Now, that right there, my friends, becomes, let me see if I can grab this real quick. Okay, that becomes the gap. So from where it closed to where it opens, now in this scenario, it gapped down, meaning that with price opened lower, so the space in the chart or the difference in price becomes the gap. So understand that on this chart, the price closed at 68.08. If there's a difference in price on Sunday, that's going to be considered the gap, and then we have strategies to trade that gap, and we are usually profitable on a Sunday night when the gap meets our requirements. Even with a small lot size, it's like a little extra gravy and the beginning of a phenomenal trading week when we catch these gaps, not only on crude oil, but we're doing this for all the indices, and we're doing this for the Forex pairs as well. So I just wanted to take a few moments to kind of explain the gap in case you had a question about what the gap is. That's all. And prices can gap at any time there's a market closure, meaning at 6 p.m., for example, for Sundays when they open. When the markets close weekly, okay, Monday through Friday or Monday through Thursday at 5 p.m. Eastern Standard Time for that 1 hour rest, and then they reopen at 6, a lot of times you're going to see gaps between 5 and 6 as well, okay? So again, that's all the gaps are, is a difference in price in the market. So what are we looking for as we begin the week, and how can you look to possibly make money on crude oil? Well, number one is if we see oil gap up or come back up to this level here, then again, here is our impulsive candle. That would be a retracement, and this would be an opportunity for you to short crude oil one more time if we get up there, okay? We would add a Fibonacci level, and we will look to stay with the trend, okay? And look where that reversal would happen right around that 61 to 88 area. So that would be one setup that we will be looking at early in the trading week. If price comes back down to this level, okay, because it is a daily level, we would look to possibly try to grab a bounce because we're going against the trend, okay? When we're going against the trend, we are only looking really for 20 pips, okay, / points, okay? And what that means is a 20 pip or 20 point price difference from entry. So in crude oil, that would be 20 cents. So for example, if price comes down to 67.42, we would look to get a bounce to 67.62. That would give us 20 pips or 20 points on crude oil. And then we will look to secure our trade, either cashing in or protecting, because we are now going against the trend. When we are in this middle area right in here, and this is the area that you'll normally hear me talk about, this is kind of like the unknown, right? When we don't have a plan, meaning you don't have a fib level, you don't have support and resistance, you're not understanding what you're doing in here, right? We don't trade from these black hole areas because this is almost like gambling, right? Price from here can go up, can go down. So we need areas of support or resistance to guide us, especially with crude oil. We need a Fibonacci level to be able to make a high probability trade. And this is what we do in the community. And again, it's so much easier when you have a lot of eyeballs on charts and people all focused in on one chart. Why trading in a community like mine becomes much, much easier. We can expedite your learning curve because trading alone is hard. But when you've got so many people moving with synergy, looking at the exact same thing, guiding each other, it makes it much, much easier. And again, the last thing before we head off the crude oil chart is looking at the higher time frame. This is why last week, when we go over to the weekly, we were 90% of us were only selling within this candle. We did not want to go against a strong trend. That takes a strong trading psychology, right? So did you have some buys along the way? Absolutely. We had a few buys along the ways based on smaller time frame levels of support and resistance. But guess what? We stayed 90% of us, like myself, I was only looking for sells. So here we are now on the September monthly candle, right? Do you want to trade upstream against that candle? We need proof that that trend is going to change before we really become strolly buyers versus sellers in the market. Okay, so heading back to the 1 hour chart, bringing back up the image here, when will that happen? So as we go back over here, in my opinion, right, we pretty much need to have price close above 72 if we are going to change that trend, right? So if you look right here and we bring it over to the left, right, if we close above 72, then we have this possibility where price heads back up towards that trend line, which is near that 75, 76. For right now, I am still 100% bearish on crude oil. There will be some intraday scalps, but we will stay bearish off these key levels until they tell us otherwise. Okay, so now let's kind of take a look at natural gas. For those of you that trade the NG, natural gas on futures or even on Forex. And again, what we're seeing here is a little bit opposite of what we saw on crude oil. We had the month of August ended up green, and the month of September has ended up started green as well. Okay, if we look at natural gas, you can see here a couple things that stand out. And this is the thing with natural gas, you have to use a lot of caution. There is still an open gap up here. And again, this gap has been here since December of 22, heading into January of 2023. There has been an open gap. Okay, so again, on NG, on natural gas, we do not pretty much jump into a gap scalp trade when the market opens, because this is very, very dangerous. We might take some midweek small gaps if they're there. But again, for the most part, no NG gaps for us, because it is just way too volatile and there's no way we are going to be leaving trades open that long. So NG, in my opinion, is better to intraday and just forget the gaps in general. So let's head back over to the chart and let's go over to last week. Again, kind of same scenario here. Okay, I just want you to look from a weekly perspective. And now what I want to start doing is marking up some of these levels here at the weekly perspective, so we can kind of see what has been happening. And then here we had some rejection points, and you can see here now that we are on the weekly. Okay, we closed very close to that level. Now, what's interesting here is this low to this high. If we add our Fibonacci retracement tool here, okay, this is why many in the group became buyers way back in August of this year, okay, just last month, because we came to a higher time frame, nice Fibonacci area that we normally target. And this is again why it's so important as a trader to look at the higher time frames. Remember, the higher time frames is where the institutional money is. What does that mean? That means that is where the banks are trading, right? That is where the hedge fund traders are trading. So we can all scalp on the smaller time frame as retail traders, but if you really want to see the bigger moves so you can stay in the longer moves, always go all the way up to a high time frame. Understand that within that time frame, there's going to be a lot of volatility. So if you're going to be a swing trader on a higher time frame, you definitely have to use smaller lot sizing or sizing compared to a small percentage of your account size. So as we get into crude oil here, not crude oil, sorry, as we get into natural gas again, this is going to be a kind of a key level that we are going to look at, because again, we are expecting some possible, right? You can see right here, okay, some possible, and I don't like red, some possible resistance at that level right in here on a weekly time frame. So let's drop now to our daily, and you can see here, let's get rid of this little circle for now. You can see here that basically when you kind of bring up this daily, now we want to mark up some levels at the daily. We had this touch here, we had this touch here, and we had area of resistance here. So that is a viable level. So again, you can see we are coming up to this critical area in this yellow box here that is going to give us a couple of different options. If we get a candle to close, in my opinion, okay, above this 2.50, then possibly we're looking for price to retest and then possibly continue to the top side. So if we squeeze our chart to the left, right, you're looking for the possibility of something like this happening. If you get a candle to close above, you can see that green candle right here, came back to retest, there's the wick, and then took off to this price point up here, which we would just mark for now as kind of a level. Okay, so that would be the scenario for continuing longs after about 2.5, 2.51, right? If we see that rejection, so if we see this happen right here, okay, then we're looking for this to continue down. We'll need to see that bearish engulfing candle to kind of give us that legway. Okay, again, we talked about this earlier. If we can get that structure break, okay, to the bottom, then we take it down. Again, we're not going to see that so much on the daily. We're going to jump to the 8-hour. So we'll be looking for this movement right over here if we're going to get another push back down towards 2.04. Okay, so we need to kind of wait for the price action to tell us what it wants to do. Okay, so again, we're looking for this type of movement to go back up, price retest area and go up, but that has to happen all the way back up here, probably even closer to 2.60. Okay, so I know this is a kind of a wide area, but natural gas can move. And again, this is a white line. I don't want you to fix yourself on 2.46 because they can go and break this wick high and then reverse and vice versa. So you really want to start focusing in on this area. And again, we'll be guiding you inside of the club if you trade natural gas, kind of what we're doing with our positions, whether we're going short or long. And they're always going to be very short-term positions with NG. I don't hold NG very, very long. Okay, so as we drop to the 4-hour chart, we can kind of see here the nice price action, right? The nice rejection of that level that we talked about, where many folks became buyers. And now we have to kind of wait and see. We're in the middle of this teacup pattern. Okay, so we're there now. Usually the teacup will give you a handle. So you may see some downward movement. And then that is a bullish pattern. So we can see then price possibly continue to the top side. But again, that really doesn't matter. The only thing that matters is going to be what the candles do. So this is going to be a key area that we really need to, let me grab this, that we really need to focus on. Okay, this area right in here, what's going to happen? One of two scenarios. We're either going to get this scenario or this is just going to push through, give us that retest, and then we can go long from there. Okay, so again, with climates are still pretty mild. Once we start getting into some colder weather up north, that's usually when natural gas begins to take off. So again, we shall wait and see. So for right now, we're kind of in a waiting pattern on natural gas. I need to see a clear move down, or I need to see a clear move up if we are going to take natural gas to either way. That's why natural gas really begins to give you some good setups by Tuesday and Wednesday. Kind of let it move on Sunday and Monday. Let it kind of tip its hand on what it's going to do for the weekly candle, and then we shall stay with that trend. Okay, I hope you got some value on that video. You know what to do if you did. Hit that like button. Why? Because you know that lets other people possibly discover this video, and it might be because of you that someone learns to trade for the first time, or that someone discovers my channel and ends up, making a little bit of money with crude oil, natural gas, and all the other great stuff that we are doing. And hey, if you are brand new, subscribe, turn on that notifications bell. By October, I'm going to be putting out a very basic intro to crude oil trading, absolutely for free. It will live on my YouTube channel, so you want to make sure that you do not miss that as well. And again, if you want to take your trading to the next level, if you want to circle yourself in a positive environment, no BS, no fooling around, people who believe in themselves, people who believe in group first, people that believe in a higher power, people believe that trading is fun and trading is great, but there's a bigger purpose in life than just making money, you definitely want to go down below, head over to the professortrades.com. I'll be the first one to welcome you, be the first one to say hello to you. I'll be the first one to welcome you to the team, to the group, to your new family members, and we would love to have you. And if you're a little bit, I don't know if this is for me, well, take advantage of that 7-day trial offer. Come on in and see if you like it. If you don't like it, you don't renew for the next month. Okay, but I'm sure you'll love it. And I'm very proud to say we've got a 94% retention rate. And I think you'll see why once you join us in the club. Either way, I want you and your family to have a great week. Don't forget to be kind to someone. Don't forget to do these 3 very important things each and every day. Number 1 is spend 30 minutes working on your physical fitness. Number 2 is spend 30 minutes working on your spiritual fitness. And then number 3, make sure that you are giving back to someone, to something that is positive each and every week, because that does good for you and for your heart. Take care, and we'll see you in the next video.